So the first thing I'm going to do, Cody, is that I recognize that there is a controlled buying, okay, algo. This is the weekly chart that we're looking at. Now, we've been in a controlled buying algo for a very long time now. If you look all the way from the lows of the 348. So the SPY does nothing but continue to go up. So anytime the SPY comes down, we know we have the famous buy the dip crew that comes in and buys up all of the lows, which is no problem. Considering this is the largest ETF in the market, there are hundreds of millions, even billions of dollars under management in the SPY. So as we are shocked and amazed that the SPY is trading at 600, we remember actually being on here when it broke 500, and it's just truly amazing. And it broke 500 this year as well. So to think that it's gone from 5 to 6 in a physical year period is amazing. But what will we tell new investors coming in right now? That the party's over? Of course not. Now is still a great time to, buy up all dips on the SPY for your long-term portfolio. And we can cover that in another time. But nonetheless, there is a controlled buying algo that has been identified on the weekly. So even the pullback that we've had, this week was still very beneficial. So now what I do is I go ahead and blow up the weekly chart. And after I blow up the weekly chart, I use very dark green and very dark red to highlight, okay, my open and close areas just on the past 5 candles. Again, only on the past 5 candles. And being that we just closed today, I can now go ahead and add this at the 585.78. So, Cody, I have a line at the 599.98. I have a line at the 598.3. Okay. And then coming on down, I have a line at today's close that we just had at the 585.7. Let's skip the white line. I have another support at 582. 582.65, another one at 579, and finally at the 571, which is one I'm really interested in, because market pending that we do get down in this area, we will be breaking next week. Again, it's the weekly chart. No, I don't count the wick. I only count where the candle closes, not where the price trades at. If you go where the price trades at, you can be fooled. What's more importantly, where it closes. But potentially next week, we have the tendency to break out of this controlled selling algo, and that, just could potentially be a great profit-taking opportunity for the bulls of last week, who had this amazing run from the 571 all the way to the 600. Now, let me go and identify why I have this white line, okay? And it's not because of this candle here. The white line at the 584. What I did then was say that there were a lot of bulls who came in at the 570, as that was the pivot point area to add. We had the pullback, we had the pop up from that, and definitely once we started trading over the 582, over the high of the last red candle, it was definitely clear selling, as everyone in this red candle had to cover. That's why this bullish candle is so big, because there was a nice bear squeeze involved in this move. Now, so there are a lot of bulls who've made a lot of money and are up very nicely. So what I then did was take the Heikin-Ashi and I said, well, where would these guys be in trouble? Where would they start think about taking some profit? If the market retraced, where would it need to retrace to in order for these guys to get just a little uncomfortable? Well, that 50% line is exactly where I drew this white line. At the 50% line of last week, huge move. Now that's not calling for the reversal, but we're talking about the psychology of people who are up and deal with a lot of funds. We're looking for those new traders who just got to these prop firms, who just got put in charge of a large account, who don't want to take any chances. Potentially with the price trading below this 584 next week, they might start taking profits, trying to secure some profits that they made during the week. This area is very, very interesting to me because in order for bulls to secure profit, they have to sell. Sell brings the market down. With that anticipation, I have gone ahead and already written my plans, trading plans for next week. Potentially, I'm looking for a weekly put, a 580 put, getting in around the 581. I see profits to the 571, even all the way down to the 561. Now, as far as a day trade, I am interested in that 581 put area, okay? Taking that down to the 579, even possibly the 574. That would definitely be huge, but it would be huge considering what is at stake. You have all of the bulls from last week who are in a position to secure money, lose a little bit of profit, lose a little bit more profit, lose a little bit more profit. So at a certain point, they're going to start heading towards the exit, and that's what I'm looking for. I don't know if it's going to happen. If anyone says they know what the market is going to do, they are lying. But what I am doing is making a plan based upon what the market is showing me. So after I do that, then I go to the daily chart and pull up the daily chart. You never know what the market will do, buddy. You are exactly about that. That was the weekly. Now we're on the daily chart. So we started with the weekly, and those were our plans based upon the weekly. So we start with a broader view. We look at the much, much bigger picture, considering what is at stake. And that's why we love the SPY, because this thing is like a locomotive. Once it starts going in a direction, full steam ahead. Now on to the daily chart. The daily chart, I simply use a lighter red and a lighter green to identify the open and close of the last few candles on the daily chart, just to have some support and resistance in between the major weekly support and resistance. The weekly support and resistance is a lot stronger than daily support resistance. I repeat, weekly support and resistance is a lot stronger than daily support and resistance. So weekly support and resistance, I'll go ahead and make it bright red. And the two areas that I have so far are 589.8 and 591.1. Those are my areas. And last but not least, we have 593.3. Those are my lines. Those are my lines that I will be looking at going into next week. So if there is a bounce from the bulls, okay, we know we closed today at the 587. My first natural profit target is going to be 589.6 naturally. So I'm going to go ahead and add that here. 589.6 natural profit target taking area. Next will be 591. And the question is, what type of call would be possible, would I be interested in? Well, that is going to depend on pre-market. Too early to determine right now. So I just want to go ahead and go over those lines right now. And let me see what else can I go over with you real quick. Let's see how that lines up. This is the 30-minute chart. I can get rid of this for today. This is a 30-minute chart going into next week. So we have clear areas, levels. That's it. That's a good word. We have levels. Lines, levels, we have them. All we have to do now is just be patient, wait and see what the market presents. If it gives us a clear opportunity, clear setup, then we take it. I was trying the Gabe trade 1348. We got confused, too much stuff on that chart that they have. Yes, sir, buddy. I do try to simplify it as much as possible, or at least explain what these lines are. But that's why I have so many charts up, so we can get a much broader view as far as the weekly, the daily, the 30, and a narrow view, the 15, the 2, and the 5. Well, that's all for now. Hope you enjoyed that explanation, Cody, as I enjoyed explaining it to you. Hope you have a great weekend, study hard, and look forward to seeing you Monday morning, God willing. Bye for now.